right? Now after servicing, where the file will go? So next comes the warehouse. What is warehouse? Warehouse is like a store. Everyone knows, right? A store. So as investor, mostly these warehouse, it could be in the lender's office, warehouse could be for the investors as well. So what is the need of warehouse? Need of warehouse is like everyone, whoever is the investor or whoever in this business, they will create a warehouse where they are going to store the files. Now it store the files in a different pools. These are different pools. Let's say these are Fannie Mae files. These are Freddie Mac files. These are local investors. Then under this Fannie Mae, there could be one two with 2% interest rate, 3% interest rate, 1 unit properties, 2 unit properties. So those are the different pools. Now, for Freddie Mac, they are also going to create similar pools with the different specifications of the loan. 2% interest rate, 3% interest rate, and then the other investors, they are also going to, these are the Penny Mac files, right? 3%, 2%, these are this product, that is that product. So that is how they are going to create a different pool. Now, what happens? This investor who purchased the 100 files from this lender also purchased some other 100 file from other investor. And next month he again purchased 100 more file, 100 more file. The value or the price of these 100 files was 100, let's say 1 million, right? 1 million, 1 million, 1 million. So 4 million they have already invested. They are going to pay. They have already invested 4 million. So right now, after 4 months, after 6 months, they have this warehouse. What is the price of this warehouse? What is the total value it contains? 4 million, right? Now, ये इन्वेस्टर के घर पे पेड़ तो लगा नहीं है पैसे का, राइट? कि वो वहां से लाएगा, लो पैसे दो फाइल, ऐसा तो होने वाला नहीं है. इट्स नॉट गोइंग टू हैपन दैट वे, राइट? What they need to do? They have a warehouse which is now valued at 4 millions. They will go to the, mostly they go to the bank, big banks, right? Or big investors who want to invest. They will go to bank and they will ask for the credit line. So there is another option. Another option is a line of credit. Line of credit is line. It's called revolving. Revolving. Chalo, we will discuss what is revolving later, but line of credit. Now everyone knows what is credit card. If I get a credit card from a bank, there is no such expiry date for that credit card. If I want to close the credit card, what I need to do? I need to go to bank, need to write an application, need to submit to close that credit card. Or the other party is bank. If bank disable my card or they want to cancel my card, they can also cancel with the notification. Either party, they need to appear, or they need to request for the closure. Then only it is going to close. Otherwise, it will remain. Let's say my credit card has $10,000 limit, right? I consumed all 10,000. Then I will pay the minimum fee, or I can, minimum installment per month. But I have the option, I can pay this 10,000 anytime. Next month, I paid it, right? With some interest rate, or even before due date, I can pay it and without paying any interest. Every month that I can do. The only difference is the credit line is also same. But the difference is here, when I get a credit card, I get a physical card. I need to swap it. I need to give the number for it. The credit line, there is no such physical card. Like I have saving account, similar way, this line of credit I will get a online account number. This is your account number. right? I can log in into it. If I have 10,000, or let's say I have given 1 million line, that means in this account, I can see there is $1 million available. Whenever I wanted to utilize any amount, I cannot directly utilize from here. I need to move whatever amount. I need 50 or 500,000. I will move to my saving account or my checking account or my current account, whatever account. I will move this money to my account and I can utilize it. Now it's my money, I can utilize. Next month, I can pay the entire 500,000, and my limit will again become 1 million, means I have the 1 million limit. Again, half of the million I spent, so my balance is 0.5, my outstanding payment is 0.5, and my minimum payment is this. I can pay back, I can utilize, I can pay back, I can utilize. This is called line of credit. There is no such expiry date. Is that clear? What is line of credit?
Yes.
Very good. Okay, now I know that I have $1 million in my account as an investor, right? But I have the orders or capacity of 4 million. So what I go to any bank, I show them my warehouse has a capacity of 1 million. I already have 1 million, but I want to increase it to 2 million so that I can, hold these files for some time. So I will pay the interest to the bank for whatever amount I'm going to utilize, right? As soon as I get a deal, I will pay directly the money and I will purchase those files. I will store them, and as soon as I think market is going up, I will sell these files. So if I hold for 4 months, that 4 million is also going to earn some money for me. So this interest which I have, taken from the bank, the credit line, whatever the money I invested, at least my interest will be coming from the. So there is a different economics or accounts, math. I don't want to get into that, but that is how the business runs. And then when I sell these files to someone else, I will pay whatever the big amount is there. That is how everything happens. That is how everything goes. Is the warehouse clear? What is the warehouse?
Yes,
Yes,
yes.
sir. Yes, sir.
Okay. Any question related to credit line? So most of the lender also use this credit line, right? Because as I told, whenever somebody or any party becomes a lender, first they go and find the investor and they take a credit line from those investors. The investor tells, okay, go and you can fund. I'm giving you 50,000 or $50,000 credit line. Go and you can fund. You need not to come every month to me, right? You fund these loans and send these files to me. I will do the invoicing and we'll see how much money you have spent. But in between that time, if you are not able to send me the files, whatever the money you are going to utilize, you need to pay interest. So there is a lot of math that goes around. Right? Whatever bigger warehouse anyone has, the bigger or more credit lines they can acquire, they can get from the bank. Okay, so after warehouse, what next? So here servicing comes in the picture when servicing was retained. So servicing is retained and then file goes to warehouse. But what if the investor is telling that no, I don't want any servicing from you. I have my own service. Few investors or many investors who already have their service as well. So they will say no, I don't want to give you any servicing. I have my own department for servicing. Send file. They will put their file in the warehouse and their own servicing team, their own servicing department, they will service the loan. Right? They are onboarding the loan. They are underwriting. They are purchasing. So everything in their system now, so they can easily service those loans, mean their own loans until those files are sold. Right? So many investors have their own service department or service units, right? So it is whenever that happens means when as a lender I sell the file to the investor and I do not have any right to retain anything about that file. That is called servicing released, right? So once the file is purchased, servicing release means now this lender has no right on that file, no right on any information regarding that file. So they will release the servicing as well. That is called service release. Now it's investors' own responsibility whether if they have their own servicing department, they will service the loan or they can outsource to third party. But for lender, the status of that file is servicing released. As soon as file gets sold, they are supposed to release the service. Because a file might have taken 6 months to get sold, right? So for those 6 months, at least lender will be doing the servicing. But as soon as file is sold, they are supposed to release the servicing rights, right? They have no right to service. They cannot contact borrower related to loan. Even if borrower contact bank, they will say, no, your loan is now with this bank. You can go and get all the information from there, right? And at the time of disclosure, when we discussed that about the servicing, about the disclosure, that time I told that there are going to be a lot of disclosure. In those disclosure, there will be one disclosure that is called servicing rights. And in that disclosure, if you read, it will be written that, this is that we can, sell this file, we can transfer all the servicing rights to any third party, to any investors. And you are good with that, you have no problem with that. Otherwise, borrower might go back. I do not know where they are selling my files, where they are sending my all information, all my personal information in that file. How could they sold? So that time, lender can go and sell that servicing rights released or servicing rights transfer. Servicing rights transfer. So they will tell that I have already disclosed to the borrower that we are going to transfer these servicing rights to any company at any time. So they have signed means they have accepted, right? So that is service release. Service retained comes before the warehouse, and whenever it's servicing released means after the warehouse. Once file reach the warehouse, servicing will be released by the lender, and now investor will take care of the servicing part. After the warehouse, the next comes the secondary market. Because once the warehouse, right, there is a point of time when lender or investor will go to the secondary market to sell these files. In the secondary market, file cannot be sold in 1 or 2. Always a file need to be sold in the big pools like 1000 files, 2000 files. And pools means similar type of loans. It could not be like I'm selling one file for 3000, 3% interest rate, one selling for Fannie Mae, one selling for no. Fannie Mae, all Fannie Mae, Freddie Mac, all Freddie Mac, Wells Fargo, all Wells Fargo, product, all conventional or FHA. So that is how the pool need to be created. Now think about a small lender, how they are going to create these small, small pools or in big pools. It's not possible. So they have to sell their files to bigger investor. And bigger investor, what they do, they keep purchasing files from different small lenders. They create a warehouse. They put all the files, make a different pools, and then with these pools, okay, this month we are going to sell these Fannie Mae files to Fannie Mae for the conventional loan or FHA loan. So that is how they are 100 files, 200 files, 1000 files. That is how they make the pool and go to the secondary market. In the secondary market, there are a lot of different players who purchase the files. Who are the big players in the secondary market? The biggest player who regulate the entire market?
Fannie Mae and Freddie Mac.
Fannie Mae and Freddie Mac.
Freddie
Right?
Mac, yep.
Yeah. So these are the big players, but there are also other non-QM. Those are non-conforming players like Wells Fargo, Lone Star, Caliber Home Loans. They also make purchase files. What happens? What they do with the files? They make a big pool, right? Big pools. And what happens? So let's say, as I told you, that there is a 4 million, right? Let's say 4 million, a pool of 4 million value of the files. There are different file, 100,000, 200,000, 300,000. Excuse me. But the total value of is the 4 million. Now, this 4 million is going to generate every month, let's say 100,000 interest rate. Are going to earn 100,000. Everyone is going to pay interest plus principal, right? So this pool is going to earn interest rate, right? This 4 million. Now, this 4 million, they are going to tell, okay, you pay 4 million to us, right? Or maybe 4.5 million to us, and you can earn this much of money. But it is not going to be possible for anyone. So what these companies do, they create the first, which is very famous, MBS. Have you heard about MBS? MBS means mortgage-backed securities. Mortgage-backed securities. Now, they are going, you can also purchase MBS. If you have the share market, you know, that brokerage account, you can invest in MBS. You invest 100,000 here, means you invested 100,000 in this. So this investor got the 100,000. What will happen? According to 100,000, whatever that you must have earned the dividend, right? So this interest rate, whatever the $100,000, 100,000 file or interest is going to be, will be paid to you as a dividend. So your MBS will keep earning money for you, right? Mortgage-backed security. You purchase the security, they are going to give you the minimum, but there are different terms and conditions. They might give you, okay, every year 10% is the guaranteed, and it might, if interest rate increase, so you might make 12% or 15%. That is how this will keep increasing. Sometimes it decreases also, but there could be some guaranteed or different type of, you know, mutual funds, MBS. Those they are going to create from these pools, and those will be sold. Because what I'm telling, that every month there are going to be millions of files, those will be coming. How they are going to sell millions? One pool for millions. So what they do, they can create, you know, MBs, let's say 4 million. So they created, let's say 100 millions securities, certificates. And now each certificate has, let's say 40,000 or some 400,000 of value, right? And that is how they just sold the 10, and they are good. They recover all the money for this entire batch. Now these people, whoever invested, they are going to get the interest or dividend, right? Who are going to mostly invest? Not the common people, right? Mostly these pools or the money will be invested on these MBS, you know, retirement. You must have, you go to HDFC Bank, there will be lot of retirement accounts. You pay the 10 months or 10 years or 15 years retirement for retirement account, and then after 15 years they will start paying you. So whatever the money is being collected from by those banks, they are going to put their money here, and they will keep earning the money, right? Lot of pension companies, banks, right? They purchase these MBS, and based on these MBS, they are going to create mutual funds, right? I as a bank, I invested for 40 millions, or let's say 4 millions on the MBS, and then I created maybe 40,000 different mutual schemes, mutual fund schemes, and I sold them in the market to the common people. They are only investing maybe 10,000, 5,000, even 1,000. I'm collecting those on the based on and giving them a certificate. Okay, you have this much of mutual fund, you have this much of whatever money collected, I'm going to put here in the 4 million. From this pool, I'm earning 10%, I'm paying you 6%. You are happy, I'm happy, right? And then this is how the next is going to be the I will receive the money, I will pay to the investor, investor is going to pay the lender, and lender is going to give you again the loan. So the picture starts from the common people who are going to take loan, and those loan will go through the market and will come back to you as a mutual fund or anything. You are again going to invest there. The money will keep rolling, right? You are going to invest from one side and going to earn or going to purchase at here from the secondary market. Any question? This is all about this mortgage cycle. If you have any question related to any of the point, you can please ask, or feel free to ask any question, whatever we have covered so far. This week onwards, we are going to start with 1003, which is going to be very interesting, 10 times more interesting than what we have done so far. Thank you, bye bye, take care.
Enjoy weekend, sir.
Thank you, sir.
Thank you.
Thank you, bye bye.
Thank you, Suresh. You have a good day.